My name is Abdoul Sam. I am Associate Professor in the Department of Agricultural, Environmental and Development Economics at The Ohio State University. This particular project that we're working on that is being funded by BASIS is taking place in northern Ghana. The motivation for this research was the reality that in many developing countries, farmers do not have access to credit. Sometimes they may wish to have credit, but they simply do not qualify for loans. And some farmers may simply choose or opt out of credit markets themselves. And that obviously has significant implications for farm investments. If you don't have access to credit, that means farmers cannot therefore undertake the sort of necessary investments that would improve yields, such as investing in fertilizers, using high-yielding varieties and the likes. And that obviously, again, carries over to incomes, it carries over to food security. The ultimate purpose of our research is to improve access to credit amongst farmers in developing countries, amongst smallholders in developing countries. So how do we do that? We do that by trying to bridge a gap between the agricultural insurance market and the agricultural credit market. So in this project, instead of marketing the index insurance to farmers themselves, what we are trying to do is to combine it with access to credit, so that if a farmer, for example, wants to obtain a loan, he or she walks into a bank and wants to get a loan, they will be asked to purchase insurance as a condition for obtaining that loan. And our hope is that by having that as a condition for obtaining a loan, what that will do is it will reduce systematic risk from the point of view of the lender. But the question is, how do we then devise a product that would reduce risk on the part of the lenders? And that's what we intend to do in this project, by combining agricultural insurance with the loan for the purpose of making farmers more likely to receive a loan, because now they have insurance to go along with it, and that makes them less risky in the eyes of the bank, because if there's a drought, the bank does not necessarily have to worry about going after the farmer to get their money back, because the bank will be receiving an indemnity from the agricultural insurance company. This is something that is already being done in some countries. For example, ACRE does it in Tanzania. So we are trying to test the viability of doing this in Ghana. And again, the reason why we do it this way is to simply see how reduction in systemic risk, how that affects the behavior of the lender. That's the number one critical point that we're trying to go after. Now that you take out the risk of default in the event of drought, how does that affect the lender's behavior to be willing to lend out more money, if you will, and perhaps to even more farmers? And so what we hope to see is that's going to make banks more willing to lend. They are going to increase their agricultural budgets that they devote to farmers. But we also want to look at how ultimately that affects credit participation on farmers as well. Are farmers going to be more willing to now enter the credit markets because they don't have to be concerned about prepaying the loan in the event of a default, if you will? One thing that we realized as we were implementing this project is lending groups are not just formed, but also advised by officials at the Ministry of Agriculture. And what that means is that behavioral changes by farmers are highly influenced by what they hear or the advice they get from these officials. And so one of the concerns that we had was that we may not be able to see an effect of our treatment simply because most of our officials are not aware of our insurance product and therefore are not advising farmers to change their behavior accordingly. Now that you have insurance, perhaps you should be farming more, perhaps you should be increasing your acreage, perhaps you should be buying high input seeds, perhaps you should be buying fertilizer. In other words, most of our officials may advise farmers to engage into perhaps risky but also more productive practices now that they have insurance versus when they do not have. This year we will definitely be talking to more of our officials who work with farmers, who provide advice to them so that they are aware of this new product and how it potentially affects farmers as well in terms of risk. Our hope is to bring together the key players in the value chain. In this particular case, the Ghana Ag Insurance Pool, officials of the Ministry of Agriculture, as well as these rural banks, so that they can do business together in a way that is sustainable once the project is ended.